Good morning or good afternoon, depending on where you are. Thanks everybody for your time today to participate in the WestStar Industrial Investor Webinar. Shortly, you'll hear from Managing Director, Rob Spadanuda, who will talk you through a presentation which was released to the ASX earlier today, looking at the full year 22 preliminary results for the company. At the completion of Rob's presentation, we will be doing some Q&As. If you do have any questions, please submit them in writing at the bottom of the screen. There was an opportunity to submit questions prior to the webinar, and a number of questions have come through. So we may not get to everyone's questions, today. If we don't, we will be sure to answer those questions directly with you at the completion of today's webinar. So now I'd like to introduce Rob Spadanuda, Managing Director of WestStar Industrial, who will take you through today's presentation. Rob, over to you.
Thanks, David. Thanks for having us. Welcome, everybody, to the FY22 preliminary results and investor presentation. If we could change slides, please. Just a bit of a summary about us, as we like to do. We're an industrial services company operating in energy, resources, utility and infrastructure sectors in metropolitan remote areas across Australia. Our specialty is engineering, construction and maintenance, fab services, and we have a large construction capability in areas like civil works, structural, mechanical and piping, which is a sweet spot for us, and E&I, electrical instrumentation works. Company's made up of two subsidiaries. As people may well know, Simpec was one of the first acquisitions we did some years ago, a few years back. It's a diversified company specialising in construction asset management services. We'll get into a little bit more about Simpec as we go through the presentation. And All Type Engineering was another acquisition we did in a couple of years ago. They have a long 30-year history of being in the engineering space. They offer workshop fabrication, site installation, construction services to the oil and gas, water power, generation, infrastructure, and a number of areas, including defence and private and public sectors. Slide, please. So a little bit about us and our people at a very high level. Company's grown very, very well over the last few years. Right at this moment, we have circa sort of 900 people across the group and growing. We operate across a variety of different industries. We've got a pretty impressive client base. A lot of those clients are starting to come back to us, as you can see the names below, tier one companies. We're now operating across 3 states. There's a huge focus on safety with strong leadership in that area across both subsidiaries. As I said earlier, the segments that we operate in is predominantly to compress it, engineering, construction, maintenance services and fabrication services. What's really interesting about the structure of the company, and I'll talk a little bit about this during the presentation, is 52% of the company's owned by management and board, and I think that says a hell of a lot about how management and board are aligned to investors and shareholders, seeking and wanting the same outcomes. Another interesting stat is circa 70% are top 50 shareholders. So as I said, there's a strong alignment to shareholders through this ownership structure, and we feel that's an asset for the company moving forward. Slide, please. A little bit about leadership. I suppose we can start with Simpec. It's led by a very strong managing director, has come along leaps and bounds in recent years, has won some serious projects for the group, has grown Simpec phenomenally over the last 5 years. Very well respected, and has got a very loyal following of employees. This year, one of the hallmarks or one of the trademarks for Simpec was the award of the Iron Bridge project, which is a real feather in Mark's cap. Moving on to Kelvin. Kelvin joined us a couple of years ago through All Type Engineering. A very strong MD of All Type, very strong leader. Excellence in his field, well respected, a good mentor across the group as well as in his own organisation, but across WestStar as a whole. And it's that experience that we're really enjoying, and we've been moving together very well as a group. Myself, my role as an MD and the CEO of the company, and Chris Mania, who's our CFO, who's been with us for some years now as well. So a very loyal group of leaders. We are very much aligned to the same sort of strategic direction of the company, and some exciting things which you'll see through the presentation. Next slide, please. So jumping right in, these prelim results, the corporate highlights at a high level, we've sort of try to compress to the most important parts. The preliminary unaudited revenue this year was $181 million. Largest number in history again for the group. It's 150 plus increase on last year, FY22. I think the results there on revenue alone are quite phenomenal, as I said, and forever growing every year. The EBITDA came in at around 9 million, which is about a 5% EBITDA generation. Another interesting stat for FY22 was we received contracted revenue of $237 million. So effectively, we signed up almost $240 million worth of work in that period. Really strong sort of capital management in this company. We're very proud of it. Cash at bank at the end of the term was circa $25 million, which included some term deposits, which we'll show as we go through the presentation. So we've developed a really strong balance sheet. We've grown this company very well through good management and good leadership. We carry nil debt. So currently the share price is, traveling at, I think it's 18 cents a share, about 110 million shares on issue. Earnings per share was about 4 cents. The market cap is sitting at around about 19 million, which is a little ironic when you consider the cash at bank figure of 25 million. So, we think we're undervalued. We'll talk a bit about that today. And the board and management, as I said earlier, it's really important. We'll keep highlighting this, have a 52% circa ownership in the group. And it's that alignment that we're going to touch on. Export finance is worthy of discussion. We've developed a really strong relationship with export finance. I think that's probably why we've sort of managed to keep our debt figure down. Bonding is very important in these areas and this type of works that we do. So as our balance sheet strengthens, it enables further growth. So by increasing these bond facility limits, so it gives us an enormous amount of sort of opportunities for the group to keep growing at that rate. Next slide, please. As I said, recorded revenue is about 180 million. The breakup for those interested was about 100 million in the second half, which is a significant increase on the first half of 75 or 74.7 million, which is nearly 150% increase on FY21, which was about 71 million. So effectively in FY21 we sort of covered that and surpassed that revenue in the first half of this financial year. The FY22 revenue contribution, as I said, Simpec made up a large amount of that. Again, some of the main reasons being, this significant contract that we've won on Iron Bridge has contributed significantly to that number. And All Type Engineering, we acquired that business a couple of years ago, started out around 20 million revenue and has continued to grow, has almost doubled in revenue and profitability and so forth. So, another success story there. EBITDA we've talked about 9 million, which is, again, another strong increase from last year. And the NPAT of sort of 4.3 million. So, the metrics again this year compared to last year are continuing to grow. They're positive, they're heading in the right direction. And we're pretty proud of the result that we've delivered today. Next slide, please. And as I touched on a little bit earlier, I find this slide quite interesting. We've talked about how we grow and discussing the revenue growth achieved through, this execution in this strategy that we've had and we've set out to achieve in early days. you know, the FY22 awarded contracts, as I said earlier, was circa $240 million. And as you can see by the, I suppose, the growth chart, what it does, it shows a little bit about the journey, about how we're growing. You know, I've highlighted there the Simpec acquisition in FY18. You know, it was an all-script acquisition, again, which highlights that, you know, the MD and the management there have taken ownership in the group. The equivalent of today, that was done at 15 cents equivalent today post consolidation, and move forward a couple of years. All Type Engineering was the next acquisition. As you can see, the growth starting to come in. It tells you a little bit about the strategy we have on this organic growth, but also growth through successful acquisition. And I think we've demonstrated over the past few years that we've been able to acquire companies successfully. We'll talk a bit about that as we go through, as I said, the presentation. We don't necessarily just, you know, go in and buy revenue from businesses. We look at real businesses with real history and real delivery of historic revenue and profitability. And the final, getting to the final FY22, you see that the growth is continuing to grow. And I think, you know, that's obviously has a lot to do with this large award, which we, you know, sat down as a team together, and we were very successful in being able to be awarded that contract. And we did a small placement at the equivalent of sort of 23 cents. So when you look at the share price today and you look at, you know, that growth chart, I think we're representing incredibly good value at the moment. And we'll, as I said, we'll touch a bit about that as we go through the presentation. Tender pipeline continues to grow. There is no shortage of work for this company. As we deliver on projects and reputationally continue to deliver, we're finding that, you know, we're exposed to more projects and being approached by more companies to do works for them. Next slide, please. A quick snapshot at the balance sheet, again, talks about value. You know, I suppose the highlights here are cash at 30 June was circa 20 million. That excluded our term deposits and bank guarantees, but $20 million, $7 million increase on the prior year at 30 June comparative. Add to that term deposits and bank guarantees of $4.5 million. And, you know, the net asset position continues to grow as we continue to be profitable. So, you know, you've got this net asset position of 23 million, an $8.8 million increase on the prior year comparative. So healthy balance sheet, nil debt, strong capital management principles behind it. And we're demonstrating what our abilities are in managing that capital. Next slide, please. I think it's important to have a bit of a snapshot about, you know, some of these projects I talked about earlier, and I said I'd come back to. I mean, Iron Bridge, again, a big feather in our cap for award for Simpec. You know, the concentration is on that project at the moment. There's, you know, a large amount of personnel. At last count as of yesterday was sort of circa 600 people on the project. It's progressing well. We're progressing well with it. It represents the group's largest contract win to date. You know, as we've talked about in the past, we're supplying vertical construction services for the works. Very strong leadership team, a lot of experience in delivering these sort of projects across Australia. A snapshot on All Type. We've picked a couple of sort of feather in our cap jobs here as well. One of the first major construction packages was awarded to us on the Lynas Rare Earths project in Kalgoorlie. That again, the scope of works we're performing there is sort of SMP and E&I works with commissioning and performance. The project's valued at circa 12 million, going exceptionally well. Again, the next one is APA Group, Ambania Compressor Station. I think that was the largest contract win for All Type to date, delivering two unit gas turbine compressor station in the midwest of WA. We've gone through civil works, landed skids on site. As I said, the project is progressing very well, and we're looking forward to pushing that to completion over the coming year. And we've generally completed most of the infrastructure, civil and earthworks. and concrete works, and now we're right into the SMP and construction works on site and the E&I works. Next slide, please. I think outlook and strategy is something we want to talk about. And from an outlook perspective on the business, if we look at the contracted revenue, yet a little bit earlier in one of the slides, it's sort of $86 million. The imminent awards, we're not short of receiving any works. We believe there'll be a lot more works that'll be landing on our doorstep in the near future. We'll have more to say about those, and that comes about from a very strong tender list and history of delivering projects. As I said, the tender pipeline is very strong. And we've got this strategic focus on access to critical minerals and the tendering activities around that in WA. Again, there's no shortage of on a macro scale of projects that are coming to the fray, and I think that we have total exposure to that in a very positive way. I mean, we have an increased capacity to win new works, and I don't think there's any limitation to the opportunities that the business has. I've talked about bonding. I've talked about a strong balance sheet. I've talked about nil debt. I've talked about our ability to take on more work. So, that's something which is very exciting for the business moving forward. And we'll continue to improve in our overhead recovery. I might touch on that. Strategy is very important to the group. We sat down some time ago and looked at what our strategic plan is, and we seem to be surpassing those as we move along quicker than expected. But we're here to grow revenue and revenue streams and earnings, strengthening margins across the group. That all comes about through operational execution, and you've got to be really good at that. You've got to have good leaders, and you've got to have good teams to be able to do that, and we're demonstrating that through our results. Always room for improvement. We're investing back in the company too. I think this is very important. You've got to invest in the systems, the resources, the staff, and your expertise that you have as you grow. And we've never sort of taken our eye off that. And I think that's probably one of the reasons why we've been able to grow successfully. I've talked historically about, acquisitions and mergers and so forth. And, we continue to review those opportunities that exist and look at the end-to-end solutions through some synergistic mergers or acquisitions. It's all about complementing the strategy of accessing new geographies and new market segments that can add value to the existing businesses. As far as determining the contractual protection, we don't just take on contracts for the sake of taking on contracts, particularly in WA and in the environment over the last few years. You've really got to protect yourself against labour and cost pressures. I think we've done a really good job of doing that. I think one of our largest jobs that is important to note that we took on through Iron Bridge. I think the arrangement we put together for labour enabled us to successfully recruit people. Yes, it's challenging. It's always challenging, but we've done a phenomenal job of 600 people on this job at the moment. I think one of the biggest risks early days for our group was people wondering how we were going to do and whether we were going to be able to get that amount of people there. And through strong leadership, we've been able to do that. And managing the cost pressures, I mean, that's an area that everybody always talks about. But what's interesting about that project, there's a lot of sort of vendor supplied items. So we sort of capped our risk on a lot of that. And what it was about was just focusing on delivering the labour at the right price and the right skill set to be able to deliver the result. So once again, we've been delivering on that pretty well. And, the last point around strategy is people. You've got to, we know that we've got to continue to attract and retain our experienced workforce. We've built this workforce up now. They've got a diverse set of skill sets in a variety of markets. And what's important for us is to keep that tender register up, keep the prospects going, winning the new work, and shuffling our experienced workforce through our projects. And we're starting to do that, and we're starting to do that quite well. and there'll be more to say about that, you know, when we win some more projects in the near future. I think one of the really interesting things about the company from a market perspective is that, you know, up and coming, there'll be some pretty strong news flow. We've still got our annual report to come out, which is circa a week or so away. We will be providing, as I said earlier, September quarter updates and quarterly updates. We will do that. So we advise all of our shareholders and potential investors about how we're traveling, where we're going, what we're winning, what we're doing. Any new contract awards, any new material contract awards that we have, we will announce as they come through. Post this presentation, the company is embarking on a broker roadshow nationally, and it's very important to start now marketing the company. I'll talk a little bit about reverse inquiries that we've sort of been having since we've been put out these numbers. And one of the, I suppose, most mature things that the company will be looking towards doing in the near future is some guidance on earnings, together with these operational updates. So, you know, we feel that we're at a mature position where we can start getting to that stage and start advising the market of where we're heading. So that doesn't come about by, you know, just waking up and wanting to do it. I think it comes about by historical performance in presenting these companies, in delivering these works, and gives us the confidence to be able to project earnings moving forward. Next slide, please. So from an investment proposition, as I said earlier today, this is a bit of a recap on what we've discussed, but, you know, we've got a strong alignment to our shareholders. The directors and management, you know, own 52% of this company. And what's really important is at a very granular level. I mean, you know, through these acquisitions of Simpec and Alltype and so forth, I think what's really important is these all scrip deals. People, you know, the people behind the businesses retained ownership in the group. We're aligned to, you know, delivering income back to these people. And I think it's not about just, you know, coming in and earning a wage. I think what it's about is about growth in the company and return to shareholders. As far as the profitability, we feel that we'll continue to grow in FY23. We feel that we're on the right trajectory for that. Capital growth and income for investors is a real focus for us. So we'll, you know, the investors will see a lot more marketing in these areas and a lot more direct inquiry in these areas that we will embark on, i.e. roadshows and so forth to promote the business. And we have this, you know, we have the beauty of this flexible balance sheet for capital management. So we have the flexibility to move forward in a very positive way. So in highlighting the value proposition, you know, the key points are, we feel we're undervalued. You know, we've got a proven leadership team. We're increasing geographically. Our reputations are growing. You know, the record's there. You know, the tender pipeline continues to grow. The model is very scalable, and the financial performance today, I think, speaks for itself. And we'll continue to improve on that as we move forward. Next slide, please. Oh, we got to the end. So I think, David, there's some opportunity for questions. I noticed there was a few that came through yesterday. I mean, I might get you to sort of drive that, and
sure.
Perhaps we can go from there.
Thanks, Rob. A great presentation, and clearly, as you've outlined, a company with strong discipline at both management and board level, and exceptional growth, but not for the sake of growth, being done in a very measured and well thought out way. Look, we do have a number of questions that have come through. As I said, a number came through prior to the webinar, and they're coming through thick and fast now. What I've done is grouped as many of them together to, rather than repeat the questions, is actually group them together so we can sort of hit some of the bigger topics. So just touching on capital management and the board's plans in that regard, have you looked at, given, you know, there is a decent discrepancy between the share price and the cash at bank and revenue profit, have you thought about a buyback? And similarly, have you thought about distributions to shareholders?
Yeah, okay. If we start with I suppose we can start with the first one, a distribution to shareholders. As I've touched on earlier today, I think what we need to be aware of, or what shareholders need to be aware of, is that a significant amount of the shareholders in the business are board and management. We're laser focused on driving the best possible return for the shareholders. So the strategy we've implemented and executed to this point has left us in a really strong operational and financial position. So what does that mean for shareholders? As I said, we pride ourselves on running a well-managed growth company with a disciplined approach to this balance sheet. I want to be in a position to firstly manage the downside and then share the upside with shareholders through profit generated. That's what the driver is for our team. I think we've got the platform, the fundamentals to re-rate this business and deliver this. So our capital management principles that we talk about has enabled us to have a progressive view on what this surplus cash may look like. As far as share buybacks go, well, I think the best way to answer that is that, you know, earlier in the year, we undertook a consolidation. This was done to mature the company and, as I suppose, further tighten the shareholder registry. And while a buyback may, I suppose, stimulate share price activity, it would be, I think, at the detriment to liquidity. As I said, the board of management own a significant amount of the business. The top 50 now, as you see from the slides, were circa 70% of the registry. And we feel the majority of those investors are now aligned with our view for the company. If I was to focus on any area, the focus would be on marketing the business to new investors. And the fundamentals are clear. And post the release of these results today, I've sort of fielded a lot of questions from, I suppose, a lot of new inbound inquiries, which has been very interesting, from brokers or fund managers, new to the WSI story. And I think this comes about when you continually delivering strong results. And those people are seeking more due diligence on the company right now as we speak. So I think the way to promote that, the way to promote the company, and the way for that to work is to organise an investor roadshow, which is what we've done and what we're doing. It's planned in the coming weeks, nationally across the country. And we look to sort of deliver a newfound interest in the company's success. And a key trigger for these new inquiries was the delivery of these results. So I'm confident in the new interest. I think it will improve liquidity. I think pricing will logically re-rate when we continue as WSI to deliver at a fundamental level. So by focusing on increasing the concentration of that ownership inside of that top 50 with new groups, and aligning to the same vision, I think that's going to be a very big positive when we take the business. So over the sort of medium to long term, when you operate a business that, I suppose, grows in revenue, grows profitably, you know, we're free of debt, that gives us the ability to pay consistent dividends over a period of time. It's always been about I suppose, being a responsible business model. That's first and foremost. So it's a long way of answering the question, David, but it's about getting the business right first. And I feel a far better use of the capital is continuing to support the operations through this sustained profitability, and then utilising that cash to distribute back to the shareholders. So, I mean, if you look at examples, like we like to, I suppose, emulate and model ourselves, like, you know, the Lycopodiums and the SRGs of the world. I think that's sort of the trajectory that we're heading down, who are paying, you know, good dividends to their shareholders. And I think they've all got respect in the market. And what we're about now is trying to, you know, we're delivering the results. We want the respect in the market for delivering these results. So we'll continue to do that. We'll continue to build the respect in the market. We've got a strong alignment of ownership between management and the market. So, you know, I think that's a very real possibility around distribution. I think the last thing I think is important to touch on is we undertook a really big job this year. And that job was Iron Bridge. So, you know, that represents the largest contract to date. And as we draw on the completion of that and the risk associated with big projects, I think it's realistic for shareholders to expect the company to be in a position to look to, you know, give returns back to shareholders. I envisage that we'll have clarity on that and comfort on that area by the end of this year. So on that basis, again, a long-winded way of answering your question, but I think it gives us a responsible position to be able to look at the available capital, understand the near contract term awards for bonding and so forth. And I think that we're nearing that point now. So we're nearing that point now where our growth, internal revenue, forecasting, and that cash generation and earnings warrant a distribution of some sort as a strong consideration in the near future. Yes.
Now, another one, sort of off track a little bit here, but businesses such as yours, margin's really, really important, and shareholders and potential investors are always looking at the margin. What's the margin return? How do you improve margin? So can you explain your margin and the metrics you use, and how are you looking or hoping to improve that going forward?
Yeah. I mean, I'll be careful about how I explain our margin, but I think, risk management is probably the answer to this. And risk management on contract is one way of improving margin. So, you don't, as I said earlier, you can't just go and take on work for the sake of revenue. It's all about profitability. And if you're not getting the right margin, there's no point in doing the work. We've been really strong on that. Our margins, I think, vary based on each subsidiary. And I think when you look through the annual report and look through last year's report, you'll see each subsidiary's got different margins, different GPs. And that's based upon, I suppose, their growth profile, the disciplines, reliability and point of difference between their competitors. And I suppose as the company matures and continues to deliver, we feel very strongly that the margins will continue to improve. They have been improving. So I think across the market they're sound. Do we want them better? Will we want to improve them? Absolutely. Do we look at that every day? Absolutely. That's what drives profitability. So it's no longer, I think, in the space that we're now working in and the type of works we're being asked to perform and the credibility that we've been able to come up with through delivery of these projects successfully. It's not about always the cheapest price anymore. So in the early days of business, it sometimes can be about that. It's more about now reliability, reputation, and ability to deliver. So the work we've been performing to date has, I suppose, laid a really strong foundation for that. Acquisitions, I'll touch on because I think that, we are actively looking to sort of look to blend margins higher. So I suppose, as I said earlier, we won't just simply go and buy revenue for an acquisition. If you look at our history of acquisitions, what we've done with those is not only we've grown revenue, but we've grown profitability in those groups, and we've done that year on year. So I suppose, and that's through looking at ways to increase margins in those business offerings. And so, we'll look to blend margins higher with unique opportunities that present themselves. And we're looking at those every day where we can add value and blend those margins higher organically across the group. I suppose one of the other points to margin is building this asset maintenance expertise in the business as well. We've been delivering on these projects. We're slowly now starting to look to capture more of the recurring asset maintenance on the projects. We're more than confident that this area of the business will continue to grow year on year. I think that'll bring an underlying strong margin return to the business as well. And it's all, I suppose in summary, it's all just about what I'm trying to say, it's about smart contract execution. So get that right, get the margins right, get the right terms, and I think the margins will grow as we grow.
And in terms of the winning of work, so you've been very successful in winning work in a diversity of industries, particularly a lot of work recently in the battery mineral space. What do you see on the horizon in that sector particularly and wider?
Yeah, it's quite exciting. I mean, as I've touched on, there's no shortage of work. We see continued growth in the extraction of minerals for the battery market. Demand continues to grow, particularly with these aggressive emission reduction targets that across Australia and the world. Lithium is quite I suppose, a common battery material, but only in commercial concentrations in certain areas. So there's a large investment from a macro cycle perspective in unlocking this extraction. And given the works undertaken in WA, they're beyond simple ore extraction. The scopes of work that they play into our strength. There's a huge variety of supply chain additional works that are occurring that we're exposed to. besides obviously the basics like the on-site infrastructure, getting gas and renewable energy to these sites, they provide further opportunity to the business because, as you know, companies like Alltype are exposed to that type of area. So I feel you'll see the awards of these projects that we'll announce in the near term, and we're looking at a number of projects in that space. And I think these opportunities for the group, if we remain focused on these potential acquisitions that we talk about, might blend into that quite well. And add value in those areas as well, which will go back to also blending those margins higher across the group.
Now, you did talk about in this presentation being able to, in the future, start issuing maiden guidance. What's your expectation on being able to do that? And what are you thinking in terms of being able to start issuing guidance?
Oh, I think it has to occur. We're at that stage. I think guidance is a function of where we're at strategically on our timeline as a business. A big step for the company was getting away from the quarterly cash flow reporting. I always felt that was a misleading snapshot for the company and appeared to sort of be misunderstood by the market. We see that move as a defining, I suppose, maturity point for the business. And naturally, guidance is the next phase of the maturity timeline. So if we look at the current works and what I've currently talked about through the presentation today, we're very confident in the work that we'll receive this quarter. And I'm trying to talk you through how guidance will work for us. The work we've carried over from the prior period into FY23. And so if you combine those, you've got the carried forward works and the recent contract awards together with what we're confident in winning, I suppose, in the near term. It sets us up for a guidance pathway and quite an accurate guidance pathway. We want to get that right so that our investors, when we set ourselves up for guidance, our investors can rely upon it. And I think it'd be appropriate for shareholders and prospective investors to see this guidance in the market in the near term from us. That's where we're heading.
Well, thanks, Robert. As I did say, we did have a number of questions coming through. We don't have time to get to all of them today. They will be answered, as I said, directly with the people who asked those questions over the course of the next couple of days. A very, very insightful presentation, Rob. Great numbers, laser focus on, as you said, fixing the balance sheet and now projecting a very strong balance sheet. The path forward looks strong. Execution, the laser focus of the board and key executives. Thanks for your presentation. Thanks everybody for watching today. We look forward to following the story and seeing that guidance start coming through. Thanks everybody for your time. Thanks, Rob.
Thanks, David.